Well, if companies in the S&P 500 were to put 1% of their cash into Bitcoin, that would increase the price of Bitcoin by $40,000. Today, it's close to $30,000. So that's more than a double right there. If we saw 10%, of course, that would add 400,000. And I just told you, MicroStrategy has put all of its cash in. Perhaps emerging markets will be faster in terms of adoption. But we have been very surprised at how quickly this has happened in the United States. Institutions are going to have a significant impact on Bitcoin's price. We're seeing all kinds of evidence today. I just gave you some about corporate cash, but we have the OCC before Brian Brooks departed. In last July, they allowed custody banks to federally chartered banks to custody Bitcoin. And just within the last month, they have allowed banks to actually become nodes on any public blockchain so that they can enable much less expensive and efficient settlement. So that is again a little faster than we would have expected. We've seen Fidelity, the infrastructure has certainly been moving into place for a while. Fidelity, the Intercontinental ICE, the Intercontinental Exchange, the CME, and Cambridge, the consultant wrote a paper about, it was a little more than a year ago, basically telling institutions, hey, this could be a new asset class. And it has a very low correlation. In fact, it has the lowest correlation if you compare Bitcoin with all the other major asset classes out there. It has the lowest correlations of any other combination. So we believe that here you can see that if our analysis on how institutions will look at allocating to this space is correct, and this is using a Monte Carlo simulation, institutional involvement could increase the price of Bitcoin. Again, it's 30,000 now, by 200,000 if they want to minimize volatility, to 500,000 if they want to maximize their Sharpe ratios. So quite a bit of work. Yassine El-Mandra, our analyst, has 2 white papers. And I should mention, all of our analysts have white papers, more extensive white papers on our site, and most of these topics. The new SEC chairman, Gensler, he spent time at MIT between his stints in the government and is very pro-Bitcoin, interestingly. And so he understands it more. I think the showstopper short term is Bitcoin. If you look at its market cap, it's $600 billion. That's like one large cap stock. So I think that what we need is for more equivalent of market cap or network value in Bitcoin. And then the SEC will be much more friendly to it. The other interesting thing that's happened at the SEC is the head of the SEC's crypto research division has been promoted to report directly to the chairman. So I think we're going to see a lot. First of all, there's more understanding. I think once, I'm not going to pick a number, but I believe it'll have to get well past $1 trillion, because an ETF, you know, the flood has to be satisfied. The flood of demand has to be satisfied. So it's going to have to get well over $1 trillion, $2 trillion, I think, before the SEC will feel comfortable about an ETF. But in terms of other funds, they may be more open. Funds that can close, that don't have to buy, mutual funds don't have to buy. They can allocate elsewhere if they get flows. So it may happen. It may be that mutual funds might get first dibs there. In the meantime, GBTC, it's not an ETF. It is it's a grantor. The underlying is a grantor trust. That seems to be the way that 40 Act funds have. That's how we have gained exposure to Bitcoin since 2015. But I do think there are going to be a lot more alternatives that are less expensive. And I know of some private funds that are less expensive than GBTC. They're more like VC funds now that will ultimately turn into hedge funds, maybe take carry down the line. So there are all kinds of wrappers evolving, I think, for crypto. But what surprised me and us generally was to watch MicroStrategy, which has put all the cash on its balance sheet into Bitcoin, and even did another equity offering so it could put more cash on its balance sheet. And I think that's a little crazy, because I think the regulators will have something to say about this in terms of what is this? Is this company the MicroStrategy technology company, or is it like an ETF? So we don't know about that. But then you saw Square put 1% of all of its assets in Bitcoin. And I think you're going to see more of that. We didn't expect that. What we did expect was, because of the low correlation of returns, institutional investors to move in. The most surprising one to me thus far has been MassMutual. It put $100 million into its general account. Now, its general account is enormous. So $100 million is something like 0.001. But what that move told us is, MassMutual is very conservative and very highly regulated. And so it had to jump through many more regulatory hurdles than I thought would have been possible by now. So I think that is a seal of approval. And then, of course, you have the institutional infrastructure moving into place, whether it's with custody, and everyone knows a lot about Fidelity being out there in terms of wanting to custody Bitcoin in particular. You have the Intercontinental Exchange, and you've got the CME now with Bitcoin futures, one settling in kind, one settling in cash. And so we do believe that Bitcoin is getting ready for institutional. But when we actually think about this, is Bitcoin ready for institutions? Bitcoin is it's roughly a $600 billion market cap. So not even half the size of Apple or Amazon. Right? Yep. Doesn't put it into perspective. And yet it is a very big idea. I think a much bigger idea than Apple or Amazon. It's the first truly global digital currency out there. And it is completely decentralized. There's no throat to choke. So unlike with Libra, you had Europe and the US and many countries saying, we'll never allow this. That's because there was one throat to choke. With Bitcoin, there's no throat to choke. And in fact, when China basically shut down the exchanges in China that dealt in crypto, especially Bitcoin, that activity just moved over to Japan, Thailand, and Korea, other countries that wanted to move ahead in this innovation space. They did not want to miss this next big thing.